please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Good morning. Welcome to Bazaar. I'm Lata Venkatesh and with me Anuj and Sonia. Well, it's the second day for us, but for the rest of Asia, of course, it's the first day of trading. So something auspicious that it is starting on a green note. But we have some of yesterday's blues to shake off. It was a solid amount of delivery-based selling we saw. 1,300 crores coming in from people whom we normally think as savvy investors, the Indian domestic institutional investors, selling, solid stocks like, HDFC saw selling, Reliance, Infosys, ICICI. So it's a bit of a blue that the market has to shake off. As if all this is not enough, we also, that range of 10,450, 10,550 has gotten breached only marginally, but it has gotten breached on the downside. To add to all this, today morning, crude is above $67. Now, that's not a very comforting thought either. So we will take it with both hands that Asia is starting in the green. Let's see how we negotiate today. Morning, both of you.
Hi, good morning. Yes, not a great start to the year, right?
But I think you have good news. How are the auto sales?
Well, as I had said yesterday, because of demonetization, the base is really low last year. So this 40% looks really good. But some of them like TVS Motor have done better than estimated. So there are odd cases in point. So I think from next month onwards, you'll get the real trend. This month, because of demonetization last year, things are a little, hazy. Morning, after what we saw yesterday, do you think for the next few trading sessions, the trend could perhaps turn in favor of the bulls, in favor of the bears, because of the kind of selling that we saw?
Morning, Sonia. It was just one day of selling and just 1 hour of selling. Look, yesterday's late fall tells you how stupid it is to trade on 1st January when you don't have market equilibrium. FII volumes were next to zero. The gross volume was 200 crores buy and 400 crore buy or some 200 crores sell from FII. So there was no counter to domestic MF selling yesterday. And this domestic MF selling yesterday was essentially on account of mutual fund redemption. It's likely that 1 or 2 large investors just redeemed some mutual fund investments. In fact, the buzz was that there was a large corporate treasury which was booking some profit yesterday. And I think the best way to look at that is the way the Nifty futures premium expanded to 55 point. If this was a market which was showing you a trend reversal, then this Nifty future premium would have nosedived. The fact is that from a 25-point premium, that became a 55-point premium because people knew that, what you had yesterday was just 1 or 2 corporate treasuries booking some profit. And that, explains the large delivery selling that you had in the best of the stocks, HDFC Twins, TCS, Tata Motors, the largest components of the market.
Wasn't there also a goodish amount of FII buying of puts? Is that something we should worry about?
Yeah, but again,
40,000 contracts.
Very low volumes, Lata. I would not read too much into that. And in fact, sometimes put buying is good for the market because that means
it's good. It's good as a buffer,
exactly.
But it seemed to indicate that somewhere they are preparing for a bit of a downside.
Exactly. But my only point here is I'm not saying that you should just ignore yesterday's selling. All I'm saying is that yesterday's selling was technical in nature. So that especially that last 30 minutes or 60 minutes, that's not start of a bearish trend, if you're thinking like that. If 10,350 is defended, which is also the 20-day moving average for the market, then it's possible for market to reclaim some lost ground. But the market gave some warning signs on the mid-cap rally getting too complacent. I think the way JP, GMR, they fell, IFCI from the high point, HDIL.
But we were talking about that last week as well, right, Anuj, as to how now there's a trend in the market, a phase where anything and everything is rallying for various reasons. So I guess that had to come to an end at some point.
No, these stocks may again start to go up. The point is that, market will keep going through these phases where it will take out the complacency. The India VIX, for example, has been rallying for last 3 or 4 days. All I'm saying is this is not a market in which you want to short, Sonia. This is, because there still remains a bull market. This is a market in which you want to get your risk management in place now. Maybe, hedge your portfolios. Try to look at, if you don't overstay your welcome in some of these mid caps, some of these high beta names. And just one more point. It happened last year as well and previous year as well. All of a sudden, near budget, you start to hear a lot of talk about long-term capital gains tax, making a bit of a comeback. And the market's focus on the budget days entirely on that. And, and if just that is not there, the market passes it on as a great budget. Last year, even a pedestrian budget was passed on as a great budget, and the market rallies on. So there's this conspiracy theory as well that, this is the market's way of, going, like, market used to sort of warn Ben Bernanke against, any kind of rate hike. It would sulk, before any major Fed event. So that's what the market did last time as well. That could also happen. And this SGX Nifty, by the way, is indicating a flat start or a bit of a positive start because the futures closing has to be compared to the SGX Nifty. Yesterday, the SGX was also not trading or trading with low volume. So that point should also be taken on board.
Okay. No, I take your point. And, ultimately, what are we talking about? We are still just 100 points off the all-time highs. So it is actually 1%, not even 1%, a little less than 1% of the highs. But it's just good to keep it on your radar that the mid-cap rally especially is very often on several days getting led by extremely questionable, by which I mean extremely leveraged stocks. So, that warning cannot be lost sight of. And I also will not lose sight of crude at 67 plus.
Yeah.
Now, that's, I was under the impression at least that in the last week of the year, everything was, overdone because it's low volume. So my interpretation of that $66 plus was that, this is just year-end thin volume game. But today it's 67. Again, it's thin volume. But it's still a bit of a warning that the crude blues are not going away in a hurry.
Okay, by the way, as we start off trade, it's a great ride in the Asian markets. I mean, Hong Kong is up almost 500 points as we speak. It's, a 10-year high that the Asian markets are seeing. And Hong Kong is generally the market that we're most correlated to. So, I don't know, maybe we may pick that positive trend over there. But what about the core sector data, Lata? How did that look?
Well, I thought it looked good, but it's not as good as it looks. Okay. It's a 6.8% core sector growth. I can't remember. I think in 2 years, I've not seen such a good number. But again, it's the same thing as your Royal Enfield and your TVS Motors. The base was a little affected. The base was not very strongly affected last time. Even in the November of 2016, the Demon month, we had done a 3.2% core sector growth. So over and above that, we are doing 6.8. So that number cannot be brushed away. At the same time, it should be more interpreted as probably 5.5 rather than 6.8, because at least some cement, for instance, because all construction activity came to an end last year in November because everyone was running for cash. Cement price output looks 17.3% higher. It's not as good as that. It's more because of the base. So you want to shave off a little bit. Still, it is a good number. It does indicate that when the GDP numbers for this quarter come out, we could be, I mean, we have definitely gone past that 6.3 kind of number, which we did in the second quarter. We should do better. It's difficult to say how much better. So on balance, core sector number is good. Not as good as it looks, but still good.
Okay, so lots of positives today to work with as well. On that note, let's kickstart the show and tell you what our wise experts have to say as we head into trade this morning. Anish Damania of IDFC Securities says two themes will predominantly play out as the economy recovers. Asset-heavy and export-oriented industries will do well, and consumption is the strongest component of GDP, and discretionary consumption will continue to do well. Their top large-cap picks are SBI, ONGC, Madison Sumi, HPCL, Hindalco, Aurobindo Pharma, BEL and Ashok Leyland, and small cap picks are Kajaria Ceramics, SpiceJet, Ashoka Buildcon and Greenply Industries.
Okay, now for some money market views. Bhaskar Panda of HDFC Bank says in an otherwise lackluster market yesterday, the rupee appreciated against the dollar to close below the important 63.80 mark. Today, all markets are open and he expects the USD-INR pair to trade in a range of 63.65 to 63.85 against the dollar. Bhaskar adds that any downward movement may be tempered by Reserve Bank buying. So expect the Reserve Bank to buy today, and IT stocks will have a problem. This is getting a little too strong for anyone's comfort.
Okay, so we'll watch out for the IT names and how they react there. But on the bond front, Bhaskar Panda says the 10-year benchmark yield had shot up earlier post the announcement of additional government borrowing. Today, he expects the yield to trade within a range of 7.32 to 7.38%. But moving on, Infosys enters a new era today with Salil Parekh taking over as the MD and CEO chair. Salil takes over at a time when Infosys is trying to strike a balance between growth and maintaining the cultural ethos of the company. Kritika Saxena tells us why Salil fits into Infi and the immediate challenges he faces.
First, why does Salil Parekh make sense for Infosys? Salil Parekh has handled Asia Pacific, Europe and North America and Capgemini, 3 areas which are very critical to Infosys, and he had a lead in North America, which is very important for Infi. He has been critical for the acquisition of iGate by Capgemini 2015, and hence has expertise in large, diverse acquisition and integrating these acquisitions, something that Infosys desperately does need in terms of scale. Salil Parekh has also spearheaded the company's cloud, new emerging technology, digital vertical, so to speak. Again, something that Infosys needs at this juncture. What are the immediate challenges now that Salil Parekh faces? One, brand emphasis. Brand emphasis has taken a beating after the clash between promoters, that is the founders of Infosys, and the management and board, and that is something that he needs to fix. He needs to create a seamless communication between the two players. He has to ensure that the company bets big and invests in digital. He has to build an aggressive sales leadership, because that's something that Infosys has been lacking behind. He needs to build client morale to arrest any kind of attrition that could happen after he takes over, since this is the 3rd management change in the last 4 years alone. And of course, going ahead, he has to ensure that he creates a strategic transformation plan for Infosys, something that the markets agree with.
Okay, thanks a lot for that. We wake up to very good cues from the global markets, especially from Asia. Hong Kong is up almost 500 points at the moment, so the party continues over there at a 10-year high. Actually, the Hong Kong market, Shanghai as well, is now at the high point, up about 1%. But our research team is here to give you the list of top 10 stocks that you guys need to watch as we head into trade this Tuesday morning. Hi guys, morning to all of you. What are you looking at, Anuj?
So, you know, Sonia, before that, the SGX Nifty is actually now indicating a 30-point gap up because 490 was the futures closing. So, if that doesn't get sold into, there's a good chance of today being a good day for the market and, you know, recovering lost ground. Stock of the day today could well be TVS Motor, but I will let you talk about that. For me, the 2 stocks to watch, KPIT Tech. I think it's a stock which has now ended a 2.5-year bear market. It fell from 220 in March 2015 to 110 in August 2017, and the FI holding fell from some 33% to 27% thereabout. After that, we have seen steady accumulation, and now the FI holding is back to its previous highs, in fact higher than that, and has shown massive accumulation over 3 months. So could not be, perhaps not a day call, but just keep an eye on some of these stocks which are coming out of multi-year consolidations. The other is Tata Power. You know, I flagged this up earlier as well. The market is clearly betting big on power reforms. There was big delivery buying in the sector yesterday, led by Tata Power. So that would be my second stock to watch today.
Yeah, power was one of the star sectors yesterday, but just about everything was rising, and we have waited for power for long enough. In fact, that was one of the reasons why I was a little worried about the quality of the rally. I mean, nothing has come, and power sector reforms take a long time doing. Discoms have to have the money to be able to buy power, and that's why that part of the rally was a little frightening, but it could still go on. Mangalam, the other problem niggling India Inc. is the anti-profiteering probe into several companies like McDonald's and some of the HUL stockists.
That's absolutely right, Lata. You know, the word that you used, niggling the companies, it is really a niggle, because if you take a look at it, the probe that has been launched against Hardcastle Restaurants, one of those HUL stockists based in Rajasthan. At the same time, we have Lifestyle, a few Honda dealers too, and that is on the basis of 169 complaints that have gone to the anti-profiteering committee with regards to these companies not having reduced their prices to levels post the GST rate revision. The notices have been sent to 3 companies. We have responses from them. Our colleague Priya collated the ones from McDonald's, who have actually said that they haven't yet received any notice, but they will respond to such notice. HUL itself has said that they are committed to reducing the prices, and the price reductions have been notified. Now, in terms of stocks, this may not mean a movement on either side like we saw in yesterday's trading session as well, but again, it is a niggle. Begets 2 questions. One, is it really ease of doing business? Or second, are there any defined parameters for anti-profiteering itself? And going forward, does that increase paperwork for the government and the companies going forward?
Okay, Mangalam, thanks a lot for that. We'll find out. But auto sales, post-market hours, of course, we had TVS, which looked quite good, and Eicher as well.
Yes, in fact, I expect TVS to definitely be in the green this morning because of very good sales that they've reported this time around. The sales were not only better than what the street was estimating, but the motorcycle segment is doing very well. And now what TVS has managed to do is to get into that, mid-size motorcycle segment, which is really a surging space. They have a new launch there, the Apache RR 310, that was launched a couple of months back, and that has got a very good response. So now they're getting into that premium segment, which could help them get their margins, to that 7-8% mark that has been elusive for them for a while. So if you look at the trend for TVS, the graph will be up for you. 2.5 lakhs this month, 2.5 lakhs the month before, and 3 lakhs in October. So despite it being a slack month, TVS has managed to do very good sales. For Eicher Motors, can't say the same. So the Royal Enfield sales were good, but they were slightly lower than the street estimates. So the total sales came in at 67,000 units. Nomura had an estimate of 72,000 units. So clearly they're lagging a little bit. 17% year-on-year growth compared to about 25% that they have been doing for the last few months. And if you look at the trend as well, 70,000 is on an average what they do per month. This time around they've reached 66,960. So there would be some amount of disappointment for Eicher Motors, but you can't say that the numbers are bad.
No, you can't say they are bad, but then, it's like Virat Kohli, even 67 or 60 is not enough.
Because you're so used to centuries.
Yes. Okay, it's also priced to perfection, so it's just possible that today it will not be one of the stars. Okay, Nigel, the Coal India dispatch and output numbers were out. Were they good or were they bad?
Well, they look quite good actually, Lata, because they have achieved close to 99% of what they set out or what their target was for December 2017. They've done around 53.44, and I'm not yet confirmed this, but I've not seen a number of more than 53 million tons in a single month in terms of dispatches. The management joined us earlier in the month of December and said those numbers are going to be good. So they're quite good actually when you achieve 99% of what you set out to do. Remember, they were targeting close to around 600 million tons. If that has to be the case, then they have to scale this up from around 53 million tons on a per month basis to around 58, 59 million tons. But the stock should open up in the green, but these numbers look quite good.
Okay, thanks a lot for that, Nigel. We'll keep an eye out on Coal India. But we can't have a top 10 without the pharmaceutical companies. DRL is in focus today, and Ekta is right here to tell us why. Ekta.
Well, they've received an approval overnight. It is an approval for a respiratory drug, respiratory infection drug. The thing is that the drug itself is not that big in terms of an approval for Dr. Reddy's. What we are seeing is a trend of approvals for them. They've received around 4 final approvals since the month of December, plus 1 tentative US approval for them. And that's actually a little bit of a change of trend for Dr. Reddy's because they had slowed down when it came to US approvals. So I expect maybe that momentum to probably be on the positive side for Dr. Reddy's simply because of the spate of approvals picking up for them.
All right. Thanks a lot for that. So that's green on Dr. Reddy's. Anisha, why are you watching Neyveli Lignite?
Lata, it's a green on that one too because the company has achieved financial closure for its UP power plant. Now, PFC, REC, SBI and consortium have agreed to lend around 11,000 crore to the company to complete this project. Now, remember, this project is in a JV with the UP Discom and the PPA has already been signed for it. The construction is underway. It is expected to complete by 2021 and is expected to add significantly to the company's top line as well as bottom line. So, good news coming in for the financial closure coming in, but we just need to know what is the cost of borrowing and how it will impact the company's P&L and finance costs. Back to you.
Okay, Anisha, thanks a lot for that.
Very fact that somebody is expanding power is good news.
Is good news. Yes, but Lata, JP Associates, there was this yesterday, whole confusion about whether they are part of NCLT or not. Some more details on that, and how do you?
No, I cannot decisively solve the confusion. When we asked the bankers, you asked RBI whether you can, keep JPA out of NCLT because the resolution is reaching a kind of denouement. The bankers merely SMS'd a reply saying not yet. So RBI has not rejected. That is the whole point. Now, one possible explanation which another banker gave is that the Supreme Court hearing on JP Infratech is on. And probably the RBI wants to wait till that is completely heard and then give the yes or the no for JPA. And the bankers are hoping that by the time the Supreme Court gives that judgment, the out of NCLT resolution of JPA will be complete. and therefore it need not be taken at all into NCLT. There is that expectation about being able to solve JPA without taking it to NCLT. If you go to NCLT, probably the same resolution scheme will be approved, but it just delays it. So there is that hope in the air that the resolution will come before and sooner than taking into NCLT. So that could be positive news. I mean, there is a lot of buzz as well that promoters are willing to come up and pay upfront their dues. There is a Business Standard front page story saying much the same thing. So in a way, all this is adding to a little bit of positivity on some of these beleaguered stocks.
But no confirmation from any banks, right, at the moment?
That's what the confirmation is. RBI has not rejected
it, yeah.
But it has not yet approved either that, okay, you can keep it out of NCLT. That approval as well has not come.
Okay, let's move on then and talk about NMDC, which is in focus this morning. Nigel joins in to tell us why. Nigel, over to you.
Well, Sonia, yesterday the stock ended with a gain of around 2%. If you take a look at it from December to 2018, the stock has moved from around 120 to around 140 rupees. Why is that? Is there a case for NMDC to go ahead and hike prices for the month of January? It seems to be a case. Why? Because, in fact, there were various miners in Odisha. They had to pay penalties because of some various illegal minings. Now, what has happened is that, in fact, they had to come up with the money by December 2017. It seems that, in fact, they couldn't come up with that money. So what's going to happen is nearly around 15 to around 20 million tons of iron ore could get shut down, and the street has been pricing this in because the penalty was levied in October 2017. So they were pricing this in, and that's why domestic miners, particularly in Odisha, that's private miners, they have increased prices in the last week. So this is giving NMDC a strong case to go ahead and increase prices. But remember, the stock has already had a big run. Today I learned that, in fact, is the meeting. So sometime during the day, we should know whether or not they can go ahead and increase prices.
Okay, Nigel, thanks
Actually, they did increase one round, didn't they?
Yes, that was in December, Lata. So, that was a pretty big price increase that we saw. But can they follow it up with another one? That's going to be important. And if the iron ore prices go up, then in fact the sponge prices will go up, and also the pellet prices will go up. So Tata Sponge, as well as other companies who produce pellets like JSPL and Godavari Power and Ispat, they as well would be in focus. But let's see whether or not NMDC can go ahead and increase prices.
All right. Now, this is some news we are getting from the telecom space. The telecom sector is on our radar because a parliamentary panel headed by Veerappa Moily has recommended a cut in levies on telcos to help expansion of networks. Now, the report from the Parliamentary Standing Committee on Finance says the following, I quote, "Festering issues relating to the detriment telecom sector, which is relatively in the nascent stage, with a levy imposed in the range of 25 to 29% of revenue, require to be squarely addressed on an urgent basis. All hurdles on this count should be removed forthwith so that telecom digital network can expand fast while ensuring service quality to the public," end of quote. Well, this quote is in the public space, so hopefully the government will take on board this. If any cuts are coming, it's positive for Bharti and Idea. I'm just putting it on the table. I don't know whether the government will actually go and cut any levies considering the position it is in, but this could be a sentiment positive.
Okay, a sentiment positive for Thermax as well because of the orders that they've been winning. Anisha joins in to tell us more. Anisha?
Well, yes, Sonia, positive news coming in for Thermax, wherein they have bagged an order worth around 327 odd crores. Now, this is from a public sector company, and this is for their upcoming chemical plant. So basically, they have won an EPC order for the BTG for a captive power plant of around 130 megawatt. Now, the order size is not very big, just around 300 odd crores, but the company's order inflows till Q2 were around 1400 odd crores. So this adds momentum to that, and also the total order book of the company was around 5,000 odd crores. So the order inflows coming in from the domestic sector, and in fact other captive power plants coming in is also good news for the sector. Back to you.
Okay, Anisha, thanks a lot for that. What about some other stocks in news? Ronit is here for that.
Thanks, Anuj. So I'll start with Idea Cellular. So they'll have a board meeting on Jan 4th to consider some fundraising plans. This can be via QIP, a placement, or well as a rights issue. So not much information there we'll know on Jan 4th. Moving on to Lovable Lingerie, their buyback will open on Jan 8th and close on Jan 19th. Remember, in November they announced a buyback of around 20 lakh shares at 250 per share. And remember, the promoters also decided to participate in this buyback. So expect some action over there.